Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Firdaus Hakimi bin Harun. I'm the first presenter of this group. For this MAF 253 group assignment, our group has chosen topic 8, which is SME Finance Gap. Without wasting any time, we shall start this presentation with the introduction first. For the introduction, the purpose of this article is to explore the financing gap in Malaysian SME, with just an emphasis on the supply side. This work focuses on the supply perspective in order to fill a research gap in comprehending the financial lacuna, which has often been overlooked due to the tendency to analyze financial lacuna only from the demand side. SME believe that finance for them is abundant. However, the supply of bank financing is largely unavailable to them. Banks maintain that lending to these SMEs remain low because of lack of qualified demand. There is a mismatch between demand and supply of funding for SMEs or a funding lacuna (gap). Malaysian SME funding lacuna is a perennial problem but rarely subjected to open discussion nor academic research. The lack of academic research is partly due to the difficulty in collecting hard data of client and practices from financial institutions, as well as the non-disclosure legal requirement. This paper is one step aimed at bridging this research gap by discussing the SME funding lacuna. The objectives of this paper are to focus on the mismatch between the demand and supply side issues of SME financing. It also highlights some of the policy responses adopted by the Malaysian government to address the issue faced by SMEs. On to the next topic, which is SME Funding Gap Conceptual Framework. This section presents the theoretical foundation that serves as the foundation for the discussion in this article. The funding gap hypothesis is used to examine SME financing restriction. Small businesses have received little attention in economics. If markets are efficient and information is comprehensive, a company's size has no effect on its ability to acquire finance, since there will be a price that covers the risk. These assumptions have now been called into question. Many studies have shown that smaller businesses have more funding challenge throughout the capital structure spectrum than bigger business. According to research, smaller organizations' financing challenge have almost double the impact on their development as bigger firm capital limit. Banking systems have consistently undeserved the SME sector in comparison to bigger enterprises. Export, leasing, and long-term financing are also becoming more difficult for SMEs. This scenario cannot be completely described by a single factor. It must be explained from both the supply and the demand side. While the supply side focuses on difficulty impacting financial institutions, the demand side focuses on issues affecting SMEs seeking capital. To the next topic, which is 2.1 SME funding lacuna, the demand side perspective. This section addresses concerns related to acquiring financing. Access to capital is a critical issue for SMEs, especially in the seed, startup, and a growth stage. Most SME research cites borrower, background, capital availability, and accessibility as significant variable driving the SME finance gap. This research adds to the issue by looking at other critical characteristics of information asymmetry. First, define the access issue. Academic research has long focused on SME access to funding. Most researchers agree that defining the access issue is not easy. Some observers have defined financial services access by categorizing them. The dimensions include availability of financial service available and in what quantity, pricing, what is the overall cost of financial service, and variety, kind, and equality of financial services. Access dimensions are connected to dependability. Is money accessible when required? Ease of access? Is access simple? And repeatability? Can finance be accessed again? Are products tailored to the individual need? And information asymmetry rationale for the financing gap is that bank lenders ration loan Berger and Odell 1998, Peterson and Ryan 1994, Asymmetry in information stems from imperfect market circumstances, low level of credit responsibility, insufficient accounting records, lack of reliable collateral, lack of transparency, and hazard peculiar to the marketplace in which SMEs operate. Small loans are hazardous for fund providers, hence the SME market sector is high risk. Banks are hesitant to lend to SMEs because they believe they will have low profit margin and significant transaction expenses compared to big enterprises. Some believe that micro and small business cannot afford market interest rate and hence need government or donor-funded credit subsidies. To provide SME access to capital, the macroeconomic, legal, regulatory and financial framework must be in place.
Assalamualaikum, my name is Fazli Hanafi, so I will explain about SME funding, the supply side perspective. There are many systematic and institutional barriers that make it hard for institutional funds to flow to the SME sector. In terms of supply side, there are things like the cost effectiveness of loan to small businesses, the opaqueness of borrower, transaction costs, and information about how lenders access credit application. The implication of this constraint is that the proportion of loan allocated to SMEs receiving bank loans is very low. First, cost effectiveness of SME financing. This related to lending scale economics. Larger low amount mean cheaper lender inspection cost per unit of loan and lower borrower cost per unit of information form, etc. Due to the link between loan size and firm size, regardless of firm quality, big loans get priority over smaller loans. Also, SME financing institutions have considerable operational costs. They cannot easily attain profitability, and even if they do, their margins are smaller than other forms of financial institutions that do not serve SMEs. Next, information economics highlight the flow in small businesses lending. Some claim that banks do not find SME lucrative due to high transaction costs and institutional risks deriving from asymmetric knowledge between borrowers and lenders. Because of their small size and opaque accounting, SMEs face greater information asymmetry. Incomplete information on a small firm, creditworthiness, and interest rate create a lemon dilemma similar to the automotive market. The lender cannot truthfully assess the borrower risk and cannot follow up after the loan is disbursed. Adverse selection and moral hazard issue arise. Besides, the SMEs are characterized by informational opacity. This is because they are often new to the formal sector and have no credit history or official records. Records are usually fragmentary and erroneous. Due to the obscurity of the SME target group, financing to this industry has higher transaction costs. Adverse selection and moral hazard are two reasons that lead to credit rationing. Lastly, to reduce the fixed cost element arising from loan assessment, tiered interest rates are used. This involves charging higher nominal interest rate on smaller loans that is loan offered to the SME finance target group.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Faiz bin Abdul Rahman, and today I will talk about small medium enterprise funding lacuna in Malaysia, excess supply versus unfulfilled demand. In Malaysia, the SME sector is one of the key that drive this nation's economic growth. The SME sector has two important roles to play. The first role is that SME are the thrust of Malaysian economic policy. It strengthens domestic demand, promotes and diversifies endogenous source of growth, and it's infused with dynamism into the economic sector. Next, the second role is SME are impetus for broad-based economic growth as they provide linkage between subsector in the Malaysian economy. They are the source of dynamism and agility. The SME sector also serves as a seabed for indigenous entrepreneurship. It has long been recognized that the vibrant SME sector result in the broad and diversified domestic production base, stimulate Bumiputra entrepreneurship, promotes the development of local technology, and contribute to the achievement of macro objectives such as full employment, poverty alleviation, and equal income distribution. Now I will talk about the SME funding, the unfulfilled demand. From the experience of policymakers and practitioners, it has been realized that the SMEs are often plagued by constraints. These restrictions, however, are not unique to Malaysian SMEs, but rather a worldwide phenomenon. The SMEs are constrained from achieving economies of scale in the purchase of input like equipment, raw materials, finance, and even consulting service. They are also often unable to access global market and are limited in their performance in increasingly open competitive domestic market. Because of their size, it is difficult for the SME to access functions like trading, market intelligence, logistics, and even technology. As such, they are unable to take advantages of market opportunities that require large volume, homogeneous standard, and regular supply. Furthermore, enterprises compete not only on the basis of price, but also their abilities to innovate or upgrade a certain product. Improvement in product, process, technology, and organizational function such as design, logistics, and marketing have become the critical success factor in firm competitiveness in globalizing economy. The SMEs are thus under pressure to innovate and upgrade their operation in order to participate in international market. However, they often lack the financial resource to do so. Given its significance and potential as a driver to economic growth, the government has developed and implemented various development programs and allocated significant funds and resources to further enhance the growth of the sector. In 2010, banking and financial institutions comprising banking and non-banking institutions has approved 62.6 billion ringgit Malaysia to more than 140,487 SME accounts, an increase of almost 60% from the year 2006. The government also allocated 37.22 billion ringgit to 83 schemes, while the credit guarantee scheme approved 48 billion to more than 410,000 SMEs. 41 financial institutions utilized the credit bureau service, while 28,230 non-banking financial institutions use the credit information provided by the SME Credit Bureau, reducing the opacity information of borrowers. Smaller enterprise as compared to larger enterprise in Malaysia experience higher financing obstacles along the capital structure spectrum. Moreover, limited market power, the lack of management skills, high share of intangible assets, the absence of adequate accounting track records, and insufficient assets all tend to increase the profile of SMEs. In contrast, larger enterprise with better business plan, more reliable financial information, and larger asset have an easier time in obtaining finance through traditional means. In addition to entrepreneurs' personal savings and profit retained in the firms, most Malaysian SMEs have approached external sources to finance business development.
Hi, my name is Irfan. I will be explaining 3 key aspects of SME funding in Malaysia from the supply perspective. SME funding in Malaysia is influenced by the country's policy, regulatory, loan monitoring, and collateral requirement are examples of environmental influence. The financial system fragility has prompted stronger central bank monitoring. Fear of a financial crisis and its impact on the real sector has led to increased central bank powers significantly. The Malaysian financial institutions are governed by the Banking and Financial Institution Act 1989 and Development Financial Institution Act 2002. The lending technology practice are affected by implicit limit on offering loans to prospective borrowers without collateral and monitoring requirement for collateral. It is not unusual for a financial institution to insist that loan be secured against other assets and third-party guarantee. Problem became more acute when applicants are small borrowers with no track records or short business. As a result of government action to grow sector, loan provider must use collateral and screening technique. Suppliers with higher risk profile, such as new Bumiputra firms, have greater difficulty obtaining loan because their asset circumstances prevent banks from accepting them as security. Land restrictions such as Malay Reserve may make loan criteria harder to meet. The perception of the supplier of funds toward SME is one of the determinants of fund allocation to SME. To lower perceived risk among loan provider, credit bureau like SME Credit Bureau Malaysia have been established. This helped to reduce the risk impression originating from asymmetric information, which translate into improved credit input that banks may utilize to process an application. Formation of SME Special Unit in Bank Negara Malaysia further helps to speed up loan accessibility. The SME Special Unit is to assist the SME in the following area, such as provide information on the various sources of financing available to the SME, facilitate SME in their loan application process, address difficulty faced by viable SME in securing financing, and provide advisory service on other SME financial requirements. Making loan more accessible comes at a price for lender. Although loans are extensively subsidized with low financing costs, for lenders, lending to diverse industries and purpose make loan more difficult to get and troublesome for banks. The lending technology utilized result in higher processing costs. Most Malaysian SME borrowers cannot provide hard data on loan through financial statements or fixed asset. Standard credit scoring tools used by Malaysian lenders to assess application are challenging to utilize with SME customer due to lack of information. Years of data collection provide information on the riskiness of borrowers in relationship lending technology. These long-term relationships allow lenders to gather psychographic data on borrowers' repayment ability. Personal working ties between loan officers are widespread and might interfere with the job demands. Using relationship banking instead of financial statements and fixed asset lending technique result in more expensive procedure and higher transaction costs. Financing has always been a perennial problem among Malaysian SME. Many research have been done on SME finance issues. Usually, SME funding issues are analyzed from the demand side. One of the most often mentioned issues is the opacity of SME, your company and promoter's background and lack of financing. On the supply side, this article discusses the behavior of the credit provider, how the environment impacts the credit provider's activity, the risks of serving SMEs, and the high transaction costs involved in providing credit to SME. This report fills the research gap on SME funding in Malaysia.